Welcome to Stock Watch with me and Auleng Lechela. And joining me to unpack your stock-related questions today are Schalk Louw from PSG Wealth, Old Oak, and David Shapiro from Sasfin Wealth. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392, or on X at Business Day TV using the hashtag StockWatch. Gents, thank you so much for your time this evening. Lots happening, right? We had the national budget, lots of corporate news, results season picking up here at home, over stateside, and market participants waiting on Nvidia's earnings. Let's start with what's playing out here at home, perhaps getting your read on that national budget that was tabled earlier. Does it do enough to, fuel confidence, investment? We did go into this budget with a lot of optimism in the air, Schalk.
Let's start off with giving it applause. Come on. We're the toughest crowd. I mean, we as South Africans, we are tough, and the toughest on ourselves. We will call ourselves names like chokers and losers and all those things, but not today. Not on the 25th of February. And why am I saying this? And David,
I think we should all whip out our Springbok shirts.
There we go. Just place and time. But let's just put this in context.
Yeah.
Why this has been a good one. This is literally how things can change in literally 1 year. If we turn the clock back exactly 1 year ago, we did not have a budget because we went back and forth. We were really scared that the GNU is not working. We saw the rand really on that stage move with the previous budget while we were waiting for the budget, moved to 1850. And then Liberation Day happened, and the rand went to 1940. The 10-year long bond rate went over 11%. Here we're sitting today, exactly 1 year later. Let's call it 9 months, 10 months after Liberation Day. We're sitting at a long bond rate at 7.8%.
Yeah.
A rand way below 16 rand. Really, really positive budget. You can only feel optimistic going forward.
Are you just as optimistic, David? Schalk highlighting how market positive it was.
You know what? You have to give congratulations because even as the minister said in his introduction, if you go back 5 years and look where we were, how things are improving, and telling there's a lot to do. Your previous guest in the previous show, we heard a little bit of that about, unemployment still incredibly high.
Yeah.
We've got 26 million people on social grants. There's a lot to go with Transnet. There's a lot of way to go with all of these, with Eskom, with the water, and issues like that. But at least we're pointing in the right direction. And I think one of the big positives is that our debt requirements are coming down. They're still high. Debt to GDP is still 76, 77%, which is incredibly high relative to where we were. But, at least things are stabilizing.
Yeah.
And in that kind of climate, you can do things. I got to say, what disappointed me was the market didn't care.
Yes, and that's what I was about to ask.
That's a different story. Market didn't care. Financials were down and retailers were down, which are reflecting what's really happening at the ground.
Yeah.
So I thought there would be more of a reaction in the market today after listening to the, to the finance minister. But, Schalk said it, we're a tough crowd.
Tough crowd to please. I was actually so shocked looking at, the financials and the banks both in the red. I just thought perhaps maybe the budget was out too late and we'll probably see some reaction tomorrow morning.
No. You need to look at the budget. I mean, when you look at the budget, it's not really money back into the pockets of the consumer. It's really positive budget when you look in terms of tax-free investment plans being increased, the amount you can contribute now for retirement annuities, preservation funds, those provident funds being increased. That is positive, but that's not really money back into the consumer's pocket. So the one thing, while I was listening to the budget, I was looking at the things like the retailers, the banks, and those kind of things, and you could see they didn't really react that positively.
Yeah.
But I would say, what's that nursery song? Dim bones, head bones connected to the neck bone is connected to the shoulder bone. We will eventually. I mean, David, you alluded to the high unemployment.
Yeah.
Remember the previous time we've had the CRB commodity index or commodities running the way it did. Because remember, we're the largest platinum producer in the world. We're the second largest palladium producer in the world, largest rhodium, 8th largest gold. Platinum price trading exactly a year ago, $980 today, trading way over $2,000. That's really good. And that the previous time we saw this was mid-2000. Now, what happened there? 2003, our unemployment level was trading at 31%, very similar to our current levels. We had this very nice commodity run. It surprised most economists worldwide on the upside. Yes, a bit of a different environment. Came off a much stronger, let's call it support line. But be that as it may, by 2008, our unemployment levels was trading at 21%. So, yes, the work really starts now. It started a year ago, and you can see these little increments of improvements. I'm positive going forward.
Yeah, and I mean, the finance minister there describing it as a turning point. He didn't say that everything is hunky-dory. There's still more work to be done. You touched on the precious metals boom, and that also being seen in that juicy revenue overrun around 21 billion rand. Also on the back of course, miners' upbeat profits. In addition to that, as I mentioned, sentiment has generally been positive, rand strengthening, bond yields at record lows, and a viewer here asking why we're not seeing that impact fueling down into GDP growth. I know you guys aren't economists, but I'm going to throw it out there. David, your thoughts around that?
It takes time for it to filter down. Valterra only released its results now. It'll pay its tax down the line. And then it'll flow into the fiscus and hopefully down the line, to consumers. But I'm telling you, consumers will get confidence, or business will get confidence, when we start to hear about no more water problems, when the electricity isn't a problem. It's still a problem. Even though Eskom is getting its act together, if you live in Johannesburg, you've got local power stations breaking down every second day and so on. So there's still a lot of issues that we have to address. The potholes, you can't believe it. And those are real issues. When those things start to improving, I think confidence begins to pick up, and consumers will start to spend again and feel that that the country is going in the right direction and addressing the issues that it had to.
And I think
but the money, the good thing is that this is a boost. And it's also up to the miners to use the money properly, not to spend it, not to waste, not to chase after
M&A activity,
projects, etc. We know history, and Schalk knows as well. He knows what I'm talking about, because in our history, when the money builds up, you find the CEOs, they're kind of champing at the bit. We've got to do something, we want to show how clever we are. Just give it back to shareholders, or if you haven't got anything, put it back into the economy and let other people use it for investment. And so I think that's going to be the challenge that we see.
All right. Valterra, shareholders in the meantime will be smiling all the way to the bank. Let's talk about those numbers. I think profits more than doubled on the back of those higher PGM prices. But operationally, the group also doing well, Schalk.
Yeah, I think it's important to note, and it's very sort of connected to what David has said. I mean, Valterra sort of speaks to what David just mentioned. Because, I mean, when you look at exactly a year ago, and this is going to talk to Valterra, when you look at exactly a year ago, I mean, we tend to think, wow, look at these fabulous returns that we've seen from our PGMs. It hasn't been for a year or two. If we turn the clock back exactly a year ago, like I mentioned, the platinum price was trading $900 odd. When you look at even today, they're all in sustainable costs for this period. It is around about the $980. So what did they do exactly a year ago? They went and they said, well, okay, this could be tough. I mean, we're actually mining these commodities at very similar level to where it's currently trading. And they looked at their operational efficiencies, they cut down on expenses, and did what most companies done. They actually tightened the belts. And then what happened? We've seen suddenly this windfall. The windfall in terms of commodities, And as mentioned, I mean, the people at Valterra, the miners, they actually go and spend at the shops, the spaza shops. The people at the spaza shops, they call it the velocity of money. How many times the money goes through the economy?
Yeah.
So Valterra, I mean, this is phenomenal results. Really, it's really shown that they've done the basics right, meaning they contained their cost if things didn't improve, and then it did. Then the platinum price and the palladium price and the rhodium price, all those things doubled, quadrupled. I mean, it really did it phenomenal, and you could see in the results. But what is important, now you've seen the dividends starting to flow. This things that we were talking about a few months ago. The cash flows, the free cash flows, these gold miners, the PGM miners, are extreme. It's going to be interesting to see what they do in a few months' time when the results come out. If they don't do any let's call it mergers and acquisitions, seeing opportunities, they're going to start needing to give the money back. Yeah. 71% of earnings being given back to shareholders by dividends and special dividends. That's massive.
Yeah, and I think looking at some of the
all Anglo-American.
Yes,
yes. Timing is everything.
They sold, I think, just over a year ago.
If they just sat for a few more months, if they kept it for a few more months, they would have been riding the wave.
And the other thing we got to watch is Valterra building a new head office in Oxford Road, and you watch, if they put a gym, if they're going to put a gym in their building, knock my mic over, then you sell the share, because that's always a sign when a company gets a new head office. But in this case, they were forced to, they were kicked out of the Anglo building, so they had to build something. Let's see what that building's going to look at, if it's down to earth, typical mining, that shows they know how to allocate capital. But if there's going to be gyms and fancy restaurants and whatever, then, boy, okay.
I mean, you want to create a great working environment, David. Something on Anglo-American, the viewer is saying they've been notified of corporate action in Anglo shares and the need to choose whether to take more shares or take dividends because these shares have done so well in the last 8 months or so. They now already comprise more than 10% of their portfolio. The viewer says they were preparing to sell some of those shares but haven't as the price continues to climb. Would you advise to take the money or let them reinvest in more, Schalk?
Tough question. I'm a commodity bull, and we spend a lot of time focusing on the precious metals, the likes of the golds, the PGMs, and the secondaries. Although we've seen some of these secondaries starting to react, one should remember that Anglo-American is very much a focused copper player nowadays, and that's the future. I mean, if you believe in this whole AI story, calling it a bubble or not a bubble doesn't matter. If you're calling a bright future in terms of AI, remember copper is one of the key ingredients, and then this is the area where Anglo will be focusing on. Then add into the mix. I mean, you're talking about corporate actions. We know that Billiton has been creating some cash lately. And there's a lot of speculation. Remember, a little bit more than a year ago, they were hot and fast wanting to buy Anglo-American. That could very much still happen. So when the likes of a Billiton is interested in the likes of Anglo-American, I wouldn't be selling now at current levels.
Let's get your thoughts around Anglo-American and perhaps talk more to M&A activity within that copper space. Schalk mentioning there the Anglo-Tech merger. We also had the Glencore Rio Tinto deal that recently fell through. BHP just stuck in the middle somewhere, looking to also pick up some of those assets.
Well, it's easy to pick up assets and to develop a new mine. And that's why you're getting all this M&A activity. You've got the basis, you've got the structure. And it's easier to bolt on an existing mine than to go and start digging, because it takes years before you can bring that to profit or start getting revenue. So look, Anglos have come from behind. They used to be a massive, relative to Glencore, relative to all the other mining houses. And, for once, we're starting to see them get their direction right. Yeah, Valterra, the sale of Valterra was unfortunate. They did the same thing. They've done the same thing with Anglo Gold, with Anglo Coal. Remember Thungela?
Yes.
But I think in the long run, probably they proved right. talking long run, because one can't see platinum kind of sustaining these levels for forever. Somewhere along the line, it'll start to fizzle out and go sideways. So, but Anglo's look in a good position at the moment. And I think for the for what Schalk said, they're going into copper. We don't know the story about copper. Everybody wants copper. And the fact that Billiton, Rio, Glencore, and Anglo's want it just shows that there must be some reason that they're all going for it, because it's not easy to find good copper deposits. So, it's at a new high, or a recent high, which is a good sign, having come back from very low levels.
All right. So,
and maybe this is the one that stands out, more so than the others, simply because the upside is greater. Yeah.
So then you would keep those Anglo shares. All right. Yeah, that was going to be my next question. All right. Let's look at the retailers.
Both of us take a long time to give you a simple answer. You know that.
You know what? That's fine. I'm okay with that. I'm okay with that. I think an explanation is way better than a yes or no answer. Let's move over to the retailer. SPAR really being under the spotlight over the past week or so. I think today the share price was down about 10%. A viewer asking, rather commenting, saying despite all the bad news around the retailer, surely somewhere a certain stock price would represent value, or at least an opportunity for accumulation. Could the panel please share a price level that would look attractive? I don't know. That's also just a really competitive space. And SPAR is kind of like the laggard. Schalk.
Leave it alone. Here was my simple answer. One word, 2 words, sorry.
Now you do a quick one. Now you do a quick answer.
I want an explanation. Expand.
I'll come back in. Let's Schalk talk. I interfered. I interrupted him.
You mentioned SPAR's been through a tough day or two. No, they've been through a tough year or two. I mean, it's been this SAP system that's taken forever and gazillion rands to implement, and it's still not done. I still felt that within let's call it the COVID, a lot of these, let's call it the Shoprites, they were quick on the draw. I mean, suddenly there was no 60 scooters. Next thing there was thousands of them, and SPAR has sort of always been behind the curve. So yes, somewhere along the line there's going to be a price. There's going to be a price on SPAR. We say this is now a dripping rose. This is fantastic, but our market is worried. For CEO to just out of the blue just to say thank you very much, that's it. I'm calling it a day.
Yeah.
There's more questions than answers. And what I've learned, I mean, David has mentioned my grey hair, been in the market for quite some time. I mean, the one thing that we've learned in the market is that when the market you react the way it does, sometimes just better to just have a look, just see before you start reacting.
All right, so SPAR not particularly attractive. Yes, you can go ahead.
One of the problems is that they're a buying organization. They've got their own stores, but fundamentally they buy, almost like a macro type thing, to try and explain it in a simple way. And a lot of the stores are franchisees or franchise stores. And you've got very little control over those people. You can't force them to do a number of things, relook at their stores, rebuild, keep it up. And I think that's a big thing. Pick n Pay learned a very expensive lesson with its franchisees. And that's actually a bit of a drawback at the moment for them. So you've seen the court case that's taking place at the moment, which arose with one of the franchise holders. So I think you've got other companies, you've got other areas to go into. As the 60s are running around, Woolworths still looks better on that side. I'm not mad about the whole company, but it's got tough competition out there. And even Pick n Pay is trying to get its act together. Volumes are picking up. It's still a long haul. But Pick n Pay is an ideal example. When things go wrong, they go badly wrong.
Exactly.
And I was about to ask you about that turnaround or no turnaround there at Pick n Pay. Did see things were getting better. Then we got that update earlier this year, and it's not looking good. Pick n Pay and SPAR seem to just be the laggards within that grocery space, David.
Yeah, they are. You've got a Walmart coming back. I haven't heard much news. Remember, Massmart pulled out, and it's taken quite a bit of time for them to get there.
I think they have about 3 stores now.
But, yeah, that's it. They got a long way to go. But just, if the numbers don't look right, just leave them alone.
Yeah.
Just stay away. So if you really feel a compulsion to go into that side of the market, you've got ShopRite. I don't think ShopRite's overly expensive. You might want to go for Woolworths. Who else? But the other two, we've been let down badly. Hey?
Yeah.
This was one of the strongest areas of the retail market. Spar, Pick and Pay. We had Massmart, ShopRite, Woolies, and that. And now it's down to 2. Or down to 1.5.
1.5, you have to, with Boxer in there also trying to gain some market share. All right, let's move over to stock picks. Schalk, I'll start with you. Where are you seeing value at the moment? Do you want to add something?
David?
No, I haven't given. I'll have to just make up one.
Oh my goodness! All right, Schalk, go ahead. Give him some time to think. Give him some time to think.
I'll talk slow and do a big one, and you can have some time. No, I think I'm going to go big. I mean, we're talking about big. I'm going to go pretty much the biggest. Microsoft. I mean, this week, and just because, I mean, this is a company, it is now currently trading 30% off its highs. Now, a lot of people will remember, Schalk, back in 2000, Microsoft was also the biggest company in the world. 2000, went into 2000, and literally lost 51% of its value over that next 2 years, and literally took another 8 years to actually turn positive. But I do think it's a little bit of a different environment. Let's call it that the whole world was a little bit harsh on some of these software companies.
Yeah.
And at these current levels, at these valuations, I do think you're buying a solid, and let's call it the biggest company in the world, at a really, really good price, or second biggest company in the world. It's off 30% of its highs, as I mentioned. And if you look at the analysts, they're still positive. They still got a target price of $600 on the company. So at these, let's call it $380 levels, I do think you're buying a quality company at much better levels.
All right, Schalk, going with big tech with Microsoft. We've given you enough time, David. Where do you see value at the moment?
Well, Schalk opened the way for me because I'm a great AI supporter. And, he mentioned Microsoft, but every dollar that Microsoft spends or Amazon, cloud services spend, all of that really depends on one company. And that's ASML's ability to deliver these these lithography machines. So this is a company which is pivotal. It's the one business that you can't do without in AI. If ASML fails, the whole chain just kind of unravels, or everything just falls apart. I think there are 3 companies, in fact. You see, I'm going to take a bit of time. ASML, NVIDIA, and TSM, which is Taiwan Semiconductors. Those 3 companies, without those 3 companies, AI cannot function. In order, it's ASML, TSM, NVIDIA, and we'll hear NVIDIA's results tonight. But ASML, superb business.
And quick expectations for NVIDIA's numbers.
They're going to be good.
Okay. All right.
I think the important thing.
I can't. There's so many billions of dollars. There's so many. You can't get your head around what they're doing. You can't get your head around those numbers. At a 4.5 trillion business in dollars, that's bigger than the JSE. And remember, those JSE, they contain Naspers and Process and Anglo-American and Glencore. All of those are in the JSE, and yet NVIDIA just overshadows all of these things.
Yeah. All right. Let's leave it.
It's massive, these numbers.
Cool. Another bumper set of numbers coming out of NVIDIA. We wait and see in anticipation. Gents, let's leave it there. Thank you so much for your time and joining us this evening. That's all for Stockwatch today. Thanks to our guests, Schalk Louw from PSG Wealth, the Old Oak, and David Shapiro from Sasfin Wealth. The close is up next. And don't forget to tune in on Friday, as we'll be bringing you the live presentation of Fortress's half-year results. That's right here on Business Day TV at 9 a.m. So be sure to not miss it.